Today we are looking at Apple Inc. ticker AAPL. It's currently at $145 a share. Should you be buying Apple stock? That is the question I'm going to answer today. We're going to be looking at my fully automated Google Sheet. It has the stock summary here with the company financials and discounted free cash flow valuation and Buffett Graham intrinsic value models to see if this stock is a buy or a sell. So firstly, let's just go back to my stock summary sheet and enter Apple as the ticker. You'll see this all updates, giving us the price, some metrics here, the shares, dividend, but most importantly, it gets the most recent financial statements. If you're interested in this spreadsheet, please check out my Patreon. Links are in the description, but let's get into it. So what's been happening with Apple? Well, it's currently at a $2.3 trillion market cap. PE ratio is 23.6, which is pretty good for what Apple's been. Earnings per share $6.15, beta 1.19, 16 billion shares, and has a 92-cent dividend, which is a 0.63% dividend yield. If we look here at the revenue, you can see revenue has been increasing apart from in 2019. It was 229, increased 15% to 265 billion, slight decrease, and then has been increasing since then, 271 and 363. And in the trailing 12 months, it is actually at its all-time high once again at 383 billion. Net income has doubled pretty much since 2017. Look at this, 48 billion, 23% to 59, 55, 57, 91, and now $101 billion on the trailing 12 months. Free cash flow, similar story. In fact, pretty lockstep with the net income. Doubled since 2017, 51, 64, 58, 73, 93, and 105 billion in free cash flow. Now we have this, the chart here. It's currently at the 250 day. As said before, it's about flat. We've got the, see 225 day is minus 2%. Now if we go a bit further out, you want to see a slightly longer story of Apple. We'll go 1,000 days. You can see that it is green and that we're up 166% in that time. But the main reason why you're here is to look at the discounted free cash flow model. Now, we do have the revenue, net income, and free cash flow as outlined in before, and we have the averages outlined at the top. So let's just see what this is going to give us in terms of the averages, and then we will tweak the formula to see what that gives us. So currently, based on the average amounts, it has a calculated stock price of $120 a share. But let's have a look at the numbers here and see if we think this is fair. So revenues, I would say free cash flow to net income, it's about 112%. This has been pretty much the average, so I'm pretty happy with that as a number. Revenue growth rate, because we did have down years in 2019 and 2020, I think the revenue growth rate will be about higher, maybe not 25%, but I can see that easily being about a 15% increase. And the net income margins, this is the total revenue divided by the net income. And because Apple is very big on the services and the services increasing, I can see the net income margins increasing. So we're going to go with 26.7%, which is the 2021 number. Now this has a discounted free cash flow valuation of $163.05 a share, which means it's at a 10% discount currently. Next, we have the Buffett Graham intrinsic value model. This takes in earnings per share, expected growth rate, and AAA bond yield. This is the only part of the sheet that is not automated, but I do give you the link right here. So let's go to get the expected growth rate of Apple, which is down here, and the expected growth rate is 9.91%. So let's just go back and add this in, 9.91%. And this gives a fair value of the company at $180 a share and a Graham price, which is sort of at a margin of safety of around about 25%. But this is sort of the buy and hold. If it's at this price, buy and hold forever. So it's actually touching it. It's getting very close. It's 147. But both of the models are saying this is actually a buy. So very interesting overall. I do like Apple as a stock, and it's interesting to see that both of the models do say it's a buy. This pullback, which we can see if we go back, has down from about 180 to what it currently is. This pullback does look like a good buying opportunity. Right guys, thanks for watching. Please give a like on the video if you enjoyed it. Remember, check out my Patreon if you're interested in this spreadsheet. Links are in the description below.